Welcome to the Statler Financial Radio Show with Philip Statler. Have a question for the show or need assistance with your retirement plan? Give Philip a call today. 863-285-3815. 863-285-3815.
After a volatile year like 2022, is it time to consider rebalancing? And as more and more people are bracing for higher taxes in the future, what moves should you consider making? That's all coming up. We're so glad you're here with us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Philip Statler. He is, of course, president and CEO of Statler Financial Services in Sebring. And Philip, I hope you have had, I hope you're maybe still even feeling full after Thanksgiving this week. How you doing?
I am doing well, and let's just be kind of transparent as people actually get to listen to this on Saturday morning and Sunday morning. I'm getting ready for tax continuing education next week. Yay, fun.
Yeah.
Three days of sitting in class, learning about all the new tax stuff and figuring out how it applies to everybody and just getting ready for that time of year because, when it comes to financial planning, taxes play a pretty big role in that. And a lot of folks don't stay on top of it like we do.
Yeah.
And so we spend a lot of time dealing with taxes. And so we'll talk about that, I think, more today on the show, I think, Jen.
We absolutely will. And, as you are preparing yourself for some of that continued education and coursework, I think pie is brain food. So just have a few extra pieces.
Oh, there we go. Gotcha.
If you want, don't you think?
Oh.
I think it
sounds some more pumpkin pie.
I think it sounds like a pretty good reason to do it.
Hey, any excuse. I'm up for any excuse to eat more pumpkin pie.
It doesn't take too much to convince me to have a little extra pie too. But anyway, all right. Well, yes, we are definitely going to talk about what's coming up in terms of taxes. The other thing I wanted to get into real quickly before we do that, if you haven't even wanted to look at your account balances with all the negative economic news that we've had this year, I hope you're listening. And that has certainly been me, Philip. I have really not even wanted to look at my 401k. I feel like I'm not supposed to, so I'm just not even checking. But is now a good time to review your portfolio, or who needs to actually go ahead and and bite the bullet and go ahead and check and see how it's doing?
Well, here's the deal. I think there's a lot of folks like you, right, that just are, I say, burying their head in the sand because they don't want to see how far they're down. But it's always, I'm going to tell you, look, you should look at it at least once a quarter, even when things are going the way they are now, sideways, because you never know when you need to make some rebalancing. And so I know a lot of folks put them in those target date funds. I'm not a fan, But so there are times that you definitely need to think about rebalancing that portfolio. And at the end of the year might be one of those times you want to think about, doing some rebalancing and making sure that, things have matched back up because your equity side may be down. Of course, your bond side may be down too. So, but it's just a time to, at least once a year, you definitely want to look at doing some rebalancing on your 401ks.
Yeah. Talk a little bit about what it means to rebalance your portfolio. That's one of those words I think we've heard, but just tell me what that means.
So that technically what you're doing is, and the way it's supposed to work anyway, is you're selling off your winners, right? And you're buying the things that have not done well. So you're hopefully making a profit on the winners, and then you're going to go down and reallocate down into the things that have not done well the last year in anticipation that next year will be their year to have a good year and that they'll come back and they'll have a good year. And then you'll do the same thing next year, sell the winners, go in and buy more of the things that have not done well that last year. Now, I will say, and I just want to put a little plug in here, that if you don't do that, you're just sitting in a target date fund. We have some options here at Statler Financial that will help you run and manage and put your portfolio, your 401k into a portfolio and help you rebalance on a periodic basis. So you're not just doing it once a year, you're doing it over the course of the year and hopefully getting some better results. So that's just an option that we do have here at Statler Financial.
Talk a little bit about your process, Philip, for helping people analyze their financial situation so they can determine if they're taking on too much risk or if they need to make some adjustments with how their retirement savings, how their money's allocated.
So I think when you look at it, Jen, one thing I say is that, like, if you're younger than 50, just keep doing what you're doing. Just keep throwing money in, right? Just keep throwing it in and investing it, and it's gonna eventually it's gonna grow. You're gonna have years like we've had this year where it may be in the cellar, but you're gonna have years like we had in 2020 where it was killer, right? In 2019, killer years. So remember that. Now, if you're over 50 and you're starting to think about, well, I'm going to retire in about 10, 15 years, then it's a little different, right? Then risk becomes more important. So one thing we look at is the rule of 100. Take your age, subtract it from 100. That is a rough estimate of how much you want invested in equities or in the stock market. Like I said, it's a broad number. It's not something when we look at it and we analyze it for folks, we nail it down a little bit closer than that. But it's a time that what we do, and that's one of the reasons we developed our core retirement design, was to help people really ascertain what their risk number is. And then check out their portfolio to see, does it really match up with the amount of risk that they want to have in their portfolio and the amount of risk they should have in their portfolio. A lot of times those are two different numbers. We want to look at those and make sure that we're on the right path to building the retirement they want. It's a lot of looking at that and then helping them develop that optimized risk match portfolio. Again, folks, that's why we developed our core retirement design. Give us a call and schedule your core retirement analysis phone consultation, 863-285-3815. It's simple, it's painless. Again, give us a call at 863-285-3815 for our core retirement analysis.
Let's get into talking a little bit about what you are getting ready to spend a lot of time on over the next week or so. A lot of our listeners might be concerned about taxes increasing in the future, making sure that they're aware of changes. What are some things that you think we ought to be aware of, especially if we're trying to be tax efficient?
If people listen to us any at all, Jen, they absolutely know taxes are going up in 2026. And that sounds like it's far off, but it's not. It'll be here before you blink your eyes. And so they need to understand that is a fact, that's going to happen. And so we want to start looking at how to be more tax efficient on the way that we invest our money and the things that we're looking at for that. That's some of the things that we need to know. And the debt is so high and interest rates are going up. Folks, I got to think that, I don't have a crystal ball. I don't know for sure, but given our economic circumstances, taxes are going to have to go up even more than they are in 2026 just to pay the interest that we're accumulating on our national debt.
Wow. So
yeah, I know. I'm sorry. Very bad news.
I know. My gosh. Okay. As you said earlier, Philip, that seems like a long way off, but it's really not. And at this point, it's not a matter of if, but when taxes will go up.
That's right, folks. You don't want to assume that you won't be impacted by those tax increases because you're not a big corporation or you're, quote, not rich enough or wealthy enough. I bet just about everyone listening has a few areas where they can become a little bit more tax efficient with their retirement money. And becoming a little bit more tax efficient can help you down the road when you have to start taking money out. I want to help you understand the potential impact taxes can have on your retirement savings. I want to help you learn about ways to reduce or possibly even eliminate taxes in retirement. And I want to help you create an income strategy so that your retirement income lasts as long as you need it to last. Folks, listen, if you saved at least $250,000 for retirement, give me a call at 863-285-3815. We can help you go over your retirement accounts, uncover some possible tax liabilities that are there for in the future, and we'll talk about some strategies to help you reduce those taxes. Again, give us a call at 863-285-3815 and schedule your core retirement phone consultation, where we'll get on the phone for 30 minutes, answer your questions, see where you are, see if you're headed in the right direction, and help you get on the right track for the retirement you always dreamed of. That number, one more time, is 863-285-3815.
Talking today with Philip Statler. He is president and CEO of Statler Financial Services in Sebring. More insights are coming up next. Stay with us.
If you have a retirement plan and would like a second opinion, call Statler Financial Services today. 863-285-3815. That's 863-285-3815.
Philip Statler at Statler Financial often talks about the difference between retirement savings and retirement income. It isn't necessarily how much money you've saved that's most important. It's having a steady stream of income in retirement no matter how long you live. Philip has strategies that can help you create consistent monthly income for the rest of your life. He can help you make important decisions today so you can have the income you need in retirement. Having a big nest egg is great, but how will it provide you with income you need for as long as you live? Call Philip Statler at Statler Financial to find out. 863-285-3815. That's 863-285-3815. Turn your portfolio into a plan with help from Philip today. 863-285-3815. Advisory services are offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida. Investing involves risk, including the potential loss of principal.
Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Thanks for joining us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Philip Statler. Philip is the inaugural Highlander Award winner for Financial Representative of the Year. He is president and CEO of Statler Financial Services in Sebring, and Philip knows very well that it's a lot easier to get a job done if you have the right tools. And we want to help you understand that the financial tools you need for retirement are a little different from what you used during your working years. We want to talk about that and help you pack your retirement toolkit. And Philip, I mean, you know what I'm talking about here, right? When you're trying to get something done around the house, for example, and you don't have the right tools to finish the project. I mean, it's a mess. Has this ever happened to you?
So I'm going to talk about two things right here.
Okay.
One is a simple one, right? My truck.
Yes.
Not the house, but truck. I wanted to put change the front plate on my truck, right? It had a FSU tag there. I wanted to take it off, put my new one on. And I went down there and I thought it was an Allen wrench, a simple Allen wrench. I went and got my Allen wrenches. None of them would fit. And I looked at it and says, well, it don't even look like an Allen wrench. And so I went to the store and I got something else that looked like that's what it was. Came back, tried that. It was the wrong tool again. So I ended up taking it to the dealership just to get my license plate changed because I couldn't figure out what tool I needed to fix the goddamn thing. So it's that's one of those things. The other one that really sits in the back of my head, and I try not to remember this one too much, is I decided to remodel my bathroom by myself.
Oh, how'd that go?
I know you and I don't know each other very, very well, but I'm not a handy person at all. I made a lot of trips to the hardware store to get stuff that I didn't have and needed for that project. So, and it's frustrating, right? When you get in those situations.
Yeah, it is. And, you know, you think about some of these situations you've been in, if you had a hammer, there are some things that you could technically get done, maybe not well, than if you needed a wrench and maybe try to just knock the thing off with a hammer. It could have gotten the job done, but maybe a little bit messier. So I think that kind of brings in our point
Jim,
here.
The other thing that just hit me is that the biggest frustration is not knowing what tool I needed.
Yeah.
Especially trying to change the daggum license plate, right? I didn't know what tool I needed.
Right.
And so I had to take it to the dealership to get a simple license plate changed.
Yeah, it's so, yeah, you're exactly right. It is so frustrating when you just can't figure out what it is that you need. And I think that is a perfect segue into talking about these financial tools, trying to figure out exactly what the financial tools that we need, what those things are. And if you do a search for retirement tools, I did this, you get millions of search results. So there's a lot to search through. I mean, Philip, you think about your frustration trying to find the right wrench. Now there's millions of hits and you're trying to sort through this. One of them that I found that I thought was kind of interesting was from the Department of Labor. It was a federal government called a retirement toolkit, this PDF that you could download. And I looked through it, and it had some resources about Social Security. It had some articles about Medicare, and then it had a couple things about the basics of retirement savings plans. So that was in the federal government's little retirement toolkit: Social Security, Medicare, and retirement savings plans. What would you say might be missing from that list? What else would you say needs to be in our retirement toolkit?
I looked at that list, and there's a lot of missing stuff in that list. I mean, I think the timeline that they put in that article is good. I mean, when you should start doing certain things.
Okay.
Outside of that, it doesn't give you really and truly any strategies or investment tools that you can use.
Mm-hmm.
I think the biggest thing is what tools do I need? And I'll just tell you that, if you go to certain people, you're going to get their tools that are available to them, and they don't have any access to any other tools.
Okay.
Like when you go to Ford, you're going to get Ford dealership. They're going to use Ford parts. They're going to do all that stuff. It's going to be specific to them. And so where if you went to a regular mechanic outside of the dealership, they're going to pick and choose whatever is going to work the best, and maybe save you some money too, right, on the parts they buy.
Right.
And it's the same thing in the financial world. Not everybody has access to all the same tools out there. Being an independent advisor, we do. We have access to all the tools to put together the retirement plan that's going to be there and it's going to be needed. And so I think that's the key. And part of that whole key is risk. How much risk do you have in your portfolio? What tools are you using to mitigate some of that risk? And if you don't know, that's where we come in.
Yeah.
That's why we developed the financial x-ray. Part of that financial x-ray is to help you determine, number one, what is the amount of risk that's appropriate for you? Number two, how much risk do you have in your current portfolio? If you don't know the answers to those two questions on a scale of 1 to 100, you need to give us a call. It's that simple. The number to call is 863-285-3815. 863-285-3815. Give us a call and let us help you find out how much risk you have in your portfolio and make sure that it's the right amount of risk for you personally. And that's what we do at Statler Financial. 863-285-3815.
Talking today with Philip Statler. He is president and CEO of Statler Financial Services in Sebring, talking about our retirement toolkit, because it is frustrating when you think about that idea of trying to accomplish something and not having the right tools. This is frustrating when we think about a car repair project or a home improvement project. It's also really frustrating to think about when it comes to our financial goals. And I think that's part of it as well, Philip. Sometimes we don't understand that certain tools are going to be used in certain ways, right? So if we are looking for growth and we have an annuity, we might be very frustrated and saying, well, this is not a good tool, but we're not using it the right way. So how do we get some help matching up the right tools for the goals, for the job that we're trying to accomplish?
And Jim, that's a good point, because I have to remind clients of that all the time, is that, they're disappointed in the earnings of an annuity or they're disappointed because of the ups and downs of the marketplace. And so we have to remind that, hey, everything that we do has a specific job and a specific task in place. That's one reason that we run through that risk analysis, right? Because we want to know what tools we should be selecting from. And that risk analysis really gives us that different options of what tools would work best in your circumstances. And so whether we need a lot of income, whether we need more safety because, you don't want a lot of risk in your portfolio. All these things will help determine what tools we are going to use, whether that's an annuity, whether that's a real estate investment trust, whether that's just mutual funds and stocks. We don't know until we sit down and put together a plan. Anybody that just puts you in an investment without having a plan in place, that is problematic from the beginning, Jim.
Right. So let's say, Philip, that our goal is generating income. That's the job that we are trying to get done with our money. What are some of the tools that we might use for that?
So there's a vast array, right? So there's CDs, right, and other safe investments. Now there's problems with that, right? Because they don't pay anything. We're not going to really generate much income.
Right.
We're going to use our principal. You can use a laddered bond portfolio using the interest from the bonds and just put them on a short-term laddering schedule, 3 to 5 years. You're going to ladder them out. You could look at a stock dividend portfolio, a portfolio that has specifically put together to generate dividends, and those dividends get paid out to folks. High yield bonds, high yield corporate debt, systematic withdrawals from a balanced portfolio. Now I see that one a lot. I will tell you that it can cause people some headaches because of the ups and downs in the market.
Sure.
While they're taking money out of that portfolio.
Okay.
Not the best strategy that I've seen. There's an immediate annuity.
Mm-hmm.
You put money in, you're going to get a lifetime income. Variable annuities with some kind of guaranteed income feature will create that income that you may need. And then a holistic retirement asset allocation plan. Which lends itself to putting together a portfolio that's very well diversified. And so where the money's coming from each and every month. And then for us, we like the bucket approach, right? It's kind of like the holistic retirement asset allocation plan, but we use money in buckets or silos. And that's worked well for our clients.
Okay, so those are some ideas for income. Let's talk about if our goal is growth. That now we're looking at some different tools. What are some of the things that we might think about there?
So here we look at things like stocks, right? Stock market, having a diversified portfolio of growth stocks, using a mutual fund that you have somebody that's doing those allocations for you, using an ETF. Using a real estate investment trust will give you maybe some growth. It's more towards income, but it is a possibility to give us kind of an in-between growth and income, as well as an indexed annuity will give you kind of both, right? It'll give you some expectations for growth, but could also be used for the income side. And with any type of a tool that you use, they all have different things. Stock market, you have the risk of ups and downs. Annuities, you have surrender charges and liquidation requirements. You can only take out so much a year. So there's different things with each of these tools that we need to understand and know that we're using those tools because of what they'll do and how they'll do it.
Right. And that's, again, your process for helping us put those tools into place in the right way. It's called the Financial X-ray Report. And you do things like help us find the right balance between growth and safety, putting the right money in growth versus income. That's what your whole process is all about.
That's right. So the whole thing about creating that financial X-ray is one, is to make you aware of where you currently stand in relationship to your portfolio and how much risk it has. The second part of that is, how can we take that portfolio and minimize the risk so that it's appropriate for you? And there's several ways that we do that. And it all depends on what that number looks like for you. To find out what your number is, between 1 and 100, give us a call, 863-285-3815. That's 863-285-3815. And let's get started with your financial X-ray. 863-285-3815.
This is the Statler Financial Radio Show. We'll be back.
Philip Statler at Statler Financial often talks about the difference between retirement savings and retirement income. It isn't necessarily how much money you've saved that's most important. It's having a steady stream of income in retirement no matter how long you live. Philip has strategies that can help you create consistent monthly income for the rest of your life. He can help you make important decisions today so you can have the income you need in retirement. Having a big nest egg is great, but how will it provide you with income you need for as long as you live? Call Philip Statler at Statler Financial to find out. 863-285-3815. That's 863-285-3815. Turn your portfolio into a plan with help from Philip today. 863-285-3815. Advisory services are offered through Statler Financial Services, Inc., a registered investment advisory firm in the state of Florida. Investing involves risk, including the potential loss of principal.
Thanks for joining us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here alongside Philip Statler. He is president and CEO of Statler Financial Services here in Sebring. Philip is the inaugural Highlander Award winner for Financial Representative of the Year, talking with me today about packing our retirement toolkit. There are so many financial tools out there. It seems like there should be a solution for just about every problem. But here's one of the issues that we have. First of all, Philip, and we talked about this earlier, if you only have a hammer, every problem looks like a nail. Here's the other thing. Sometimes we have an emotional reaction to certain tools or products. We reject them based on what we've heard or what we assume. And we don't do this with physical tools, Philip. Nobody says, oh, I don't like screwdrivers, so I'm never going to use one in anything ever. But we do this with money. Talk about that and why that's a dangerous line of thinking.
Well, you're right. They do. I can't tell you how many times I've sat down with folks and we run the risk analysis and they need more safety. And we start talking about annuities and indexed annuities. And all of a sudden you see the whites of their eyes light up and say, oh, no, we can't do that.
Right.
Why can't you? Do you know, have you used them before? Oh, no. But my brother-in-law told me,
Mm-hmm.
It's terrible. We should never use those. Well, it's a tool. And if used properly in the right circumstances, will do you justice in your portfolio. I get the flip side of that, right? I sit down with folks and usually that person I say the annuity word to, they've got everything in stocks and mutual funds.
Yikes.
Now take the next person, we run their risk analysis number and they have all their money sitting in CDs.
Mm-hmm.
And they need more risk. We need to look at, for you, a very conservative tactical portfolio. Oh, no. We're not going to go in the stock market. So, because all they've seen, all they've heard is bad things. Mm-hmm. Right? They don't look at, they do hear about their, the guy on the golf course that said he made 100%, but he stretched, it was like a fishing story, right? So, but that's the problem is people look at those tools and those tools used properly will give you the results that you need. And I think, look, you're hiring a professional, right? If you went to a contractor and said, look, I need you to build my house, but I'm against you beating nails with a hammer. You can't use a hammer.
Doesn't make sense.
How are you going to build your house?
Right.
They can't. You got to look at all the tools and what they're designed to do. And as long as you're using them for what they're designed to do, that's what you should use them for.
Right. And you know what? I like that word that you used a few moments ago when you said we need to get tactical here. That's an important part of this. We don't want to be just randomly picking and choosing where we're going to put our money, going through and just clicking on different places online and saying, okay, I'll try some here, and some here. We need to be tactical with this. That's what helps us make sure our money's going to last. I just want to clue in on that word for just a second because I think that's an important word that you used.
Well, that's true. And so I've learned a long time ago because I've lived through 2 major bear markets, right?
Yeah.
And what I learned in those bear markets is that, hey, having that pretty pie chart asset allocation, it didn't work. It didn't work in 2000 or 2008. If you were in that pie chart in a conservative portfolio, you still lost money.
Yeah.
And so So that taught me that you need a well-devised tactical portfolio that that does look at the economic situation. It looks at how high the stock market is getting. It looks at all these other factors to build this portfolio, and it's different than just buy and hold.
Right.
You know, just being tactical means, hey, there may be times that we make wholesale changes in that portfolio. And there may be times that we don't make any changes. There may be times that we take risk off the table, so we don't have as much risk in that portfolio. Versus buy and hold, you don't make any changes. Maybe once a year you come in and do a little bit of change here or there. It's just a different mindset.
Mm-hmm.
And over the years, my experience has taught me that tactical has worked better over time.
Right. Right. So let me just put that out there. If you have been working with somebody and that word tactical strategy, if you don't think those things are being addressed in a way that makes sense for you, or if you don't feel like there has been a change in those strategies, in those tactics after you got into retirement, 863-285-3815 is the way to reach Philip Statler at Statler Financial Services. That's 863-285-3815. And also, Philip, we can go to your website and get on the calendar as well, right? StatlerFinancial.com.
That's right. You go to statlerfinancial.com, and there is a calendar link there that you can get to my calendar. And again, the number is 863-285-3815. To schedule a time just to sit down and analyze your portfolio. Because the other part of that, Jen, is have you had any changes made in your portfolio at all in the last year? If not, you're not in a tactical portfolio.
Great point. Great point. Again, 863-285-3815. And if you'd like to just put yourself on Philip's calendar, go to statlerfinancial.com and you can do that there as well. statlerfinancial.com. As we're talking about this retirement toolkit, Philip, another tool, another financial tool that's out there is life insurance. And this is one of those things, you know, I have a young family. I have 4 kids. We still have a mortgage. So obviously life insurance is a part of my financial plan, what my husband and I have. We have life insurance for the kids. How could that potentially fit into a retirement toolkit, though?
Well, that's a good point. So most people think they get to retirement, they don't need life insurance anymore. And some people stay away from permanent life insurance because they only want it for a certain period of time. And I understand all those different theories and different philosophies around life insurance. But there's 2 areas that I think life insurance, if started early enough, now that it could make some sense. One is that a permanent life insurance policy started young enough and funded on a well-balanced plan could create income in retirement.
Okay.
You know, if planned properly and done right, it could being the primary word there, produce some income in retirement. The other important aspect of it is that most life insurance policies today will have a couple different riders associated with it. They'll have a long-term care rider sometimes, but most of them have a terminal illness rider. And the terminal illness rider says, "Babe, look, if a doctor says I'm going to die sometime in the next 12 months, then you can have access to some of that death benefit."
Oh, wow. Okay.
So that becomes important. And for those that have a long-term care rider, then that life insurance policy could double as a partial, not a full, long-term care benefit for you. And every policy is different. You need to understand exactly what you have to see what benefits are available for you down the road. But that is a possibility. It could be there for that issue if you have the right type of permanent policy.
Right. And you know, it's interesting when you talk about some of those options, some of those riders, some of those things available on life insurance policies today, on some of them that perhaps weren't there years and years ago. What about things like long-term care? That is we have some different tools and solutions to deal with that. We used to have these traditional standalone long-term care policies, but you were just talking to some of the options potentially with long-term care. So a lot of the tools that we have today are different for today's retirees. You need to keep that in mind if you're getting some advice from your father-in-law or your aunt or your neighbor, right? The tools that we have today might be different from what they were using.
That's right. If you have a policy, if you have a policy that you had 20, 25 years ago, it may not have any of this stuff in it. So it may make sense to say, okay, what's out there today? Can I take what I have and put it into something new? Maybe not, but it may be worth that discussion, Jen, to find out if that would put you in a better place financially going forward.
So, Philip, let's talk about how you help somebody find the right combination of tools for a comprehensive strategy, how you help them figure out what needs to be in income, what needs to be in growth. What are the concerns that we need to address as it relates to things like long-term care and healthcare? How do you help somebody build that comprehensive strategy that's going to handle all these different aspects?
So that's a good question, Jen, and it boils down to a couple different things. One is the financial x-ray, where we determine, based on that, how much risk you can tolerate within your portfolio. Second, we're going to look at what we call the rule of 100. And that is going to say, hey, we're going to take 100 minus your age, and that's going to give us some idea of how much you should have risk in your portfolio. Is it exact science? No. That number gets tweaked plus or minus depending on your current circumstances. But that's the second way we look at risk. And the third thing we do is we build a financial income plan, a retirement income plan that's written down for you. And that retirement income plan, like I said in the past, we use a bucket approach. So we're going to use a bucket, and certain buckets are going to last certain amounts of time. And over time, it's going to grow and still provide you the income you're going to need. And so based on that plan that we put together, then we look and see what tool do we need for each of those buckets. And that could be drastically different for you than it is for my grandmother. It's going to be different. So it's not one size fits all. It's going to depend upon the person, how much income they need, how much risk they can tolerate as to which tools we're going to use. But we're going to walk through a process to get to the answer to that question. And if you don't have a written retirement income plan, that could be an issue, right? How do you know what tools to put in place if you don't have a plan in place? Give us a call and let us help you determine, one, how much risk you have, two, what that income plan needs to look for you, and what the right tools are to put into that plan. Give us a call at 863-285-3815. That's 863-285-3815. I'd love to sit down with you and coach you into and through retirement. That number one more time is 863-285-3815.
This is the Statler Financial Radio Show. We'll be back.
This is your captain speaking. We're expecting fair skies, a smooth flight, and about a 85% chance or so of making it to our destination. So sit back, relax, and enjoy the rest of the flight.
Would you stay on that plane? Of course not. Well, do you have a retirement plan where you probably won't run out of money? You need a plan that no matter the destination will help you get to and through retirement successfully. Philip Statler and the team at Statler Financial Services can design a plan to help you get to your destination as comfortably as possible, even if Wall Street or the economy causes some turbulence. Call Philip Statler and the Statler Financial Services team to start working on your plan. 863-285-3815. That's 863-285-3815. Get a plan designed to allow you to sit back, relax, and enjoy the retirement you've worked so hard for. 863-285-3815. Firm offers insurance services, advisory services offered through Statler Financial Services Incorporated, a registered investment advisory firm in the state of Florida. Investing involves risk, including the potential loss of principal.
Thanks for joining us today on the Statler Financial Radio Show. I am Jen Rezac, happy to be here with Philip Statler. He is president and CEO of Statler Financial Services. Philip is the inaugural Highlander Award winner for Financial Representative of the Year. Check him out online at statlerfinancial.com. And of course, you can also get on social media, get on Facebook, do a search for Statler Financial Services, and they will pop right up. And Philip, it's funny, you think about the world of finance, there are things that can have a positive impact on one set of people while negatively impacting somebody else at the same time. There's somebody benefiting from credit card debt, higher taxes, higher interest rates, and there's also somebody who's hurt by those things. So we're gonna go through some of these areas that are both good news and bad news, and how do we navigate them is what we're gonna do here in this last part of the show today. I want to start with an example from the lending world. And Philip, I thought this was an interesting headline that I found from Wall Street Journal. Credit card debt keeps falling. So that is good news for everybody except the lenders, except for the credit card companies.
They don't like that at all, do they?
They don't. You're right.
You're right. That's a great example is that type of thing is good news for for our population, not so good for the banks and the credit card companies. And obviously that's great news. People are paying down their debt, which is tremendous. I mean, it's one thing we've been looking for a long time in this economy of ours. We look at that, but the companies that issue those cards, they rely on more people using them, carrying higher and higher balances, because that's where their revenue comes from, right? The credit card fees, the interest rates. So this could indicate a coming long-term trend, if you will, with how people are thinking about debt, which is good news.
Yeah.
They're thinking about debt that way. However, it's bad news for those companies. Again, in 2020, credit card spending in the U.S. totaled some nearly $3.9 trillion on just general purpose and store cards, and that's down 9% from 2019 spending. Now, you could say, well, is it the pandemic? Not necessarily, because I think more people shop from home, spend more money,
right.
On the pandemic. But I think a lot of them were smart with some of their stimulus money and use that money to pay down debt. The question is, will that continue in 2021 and 2022? If it does, Jen, I think that will be good news for us here in the United States.
Yeah, for sure. How do you talk to clients about addressing things like that high interest debt before retirement? Because with debt, again, there's a difference between a mortgage and credit card debt. How do you talk to people about addressing some of that while they're still working?
That's a good question, because I do get that question a lot. Kind of the opposite effect, right? Should I pay off my house? Mm-hmm. And I know that's not the high interest rate debt, because going into retirement, I tell everybody, look, you need to be debt free, except for maybe your mortgage.
Okay.
And if you're paying 3.25%, maybe 3.5% or less, I wouldn't be in a hurry to pay my mortgage off, because typically you're going to be able to make more money on your investments than 3.5%. Mm-hmm. Now, if you just got it sitting at the bank, not the case. But if you truly have it invested in some kind of retirement income plan or investment plan, you should be earning on average better than 3.5%. So it doesn't make sense to pay off the house. It does make a lot of sense to pay off anything else that has a higher interest rate than that 3.5%.
Okay.
It just makes total sense. And the more out of debt you are heading into retirement, the better off you're going to be, the more comfortable you're going to be in that retirement lifestyle.
Yeah. It seems like it would be a good thing. It seems like it would be a really good thing. Here's another one. Low interest rates. We hear that referred to as a double-edged sword. It's good news for borrowers. If you are taking on that mortgage, if you are at a stage of life when you are borrowing money, you love low interest rates. It's bad news for savers, though, for people who are wanting to earn something off of that in retirement. Talk about how that works.
Well, you're right. I mean, so much. I mean, we're so thankful right now that mortgage rates are so low, and interest rates seem to be very low, even on car loans, and
Mm-hmm.
and even credit card rates have gone down a little bit just because interest rates as a factor. But it is a double-edged sword because the poor folks that are thinking about retirement, they have their money in savings making zero.
Making nothing, right?
Virtually nothing. It is nothing when you take into consideration taxes and inflation, right?
Right.
So I spoke with somebody the other day, and they had a CD renewing, and they were antsy. Phil, we got to do something. We got to do something. It was a 5-year. We really did well the last 5 years. We were getting 3.25. But the renewal rate is for 5 years is I think it's going to be 0.5 or 0.75%. And that you can't get ahead if that's all you're making on your money at the bank. And so, it's good for those people that have to borrow money, but people that need to live off their interest rates, it hasn't been good for them for, it seems like forever, Jen. It's been a long time since we've seen decent interest rates.
So how do you help retirees navigate those lower interest rates in retirement? When you're at that phase of life where this is affecting you, how do you help people deal with this?
Well, I think that we look at a couple things. One is that most people, they have their money at the bank because they want something safe and secure. The issue is that most of those type people actually need a little bit of risk in their portfolios. And they just don't realize it, or they're so risk averse, they're not willing to take the chance. But it is, even somebody that's 90 years old, a lot of times we'll sit down with them and they'll have a little bit of money in the market. Not a lot, but still they need a little bit of that exposure to help keep up with inflation. So you say, Phil, but what do you do to get safety? Well, there are things out there that will give you some principal protection and give you some decent earnings over the lifetime. And we use annuities for that. A lot of times index annuities will give us the ability to know that their principal is protected. They're not going to be affected by market risk, but yet they're going to get a better rate of return than what they're getting on their savings in the bank. So that's an area a tool. That's one of the tools we use. Is it the only tool? No, but it is a tool that will get us safety and a better return than what they see at the bank, Jen.
Here's another area that I want to talk about here. This is one that I noticed, especially in my former days as a reporter. Let's talk about taxes, because we hear a lot of times when those monthly reports come in about what state tax revenues were or what federal tax revenues were or whatever, it's presented in this light that it's good news that tax revenues came in at a higher level. And it is good news for the government entity that gets to spend it. But then when we look at the other side, that money came from taxpayers who don't get to spend that money themselves anymore. So that's the other side of this coin. We know that paying taxes are part of life, but talk about the impact that can have on our retirement savings.
Yeah, that money's coming from you and me and everybody else out here.
Right, exactly.
So it's and that's the issue, is that folks forget that their IRAs are taxable when they take it out. Their 401ks, they're going to pay tax on that when they take it out. They don't own it 100% free and clear. Mm-hmm. There's a mortgage on that tax-deferred money. And the problem is we don't know how much the other party owns of our retirement account, because it depends on what tax bracket you're in. And as taxes go up, guess what? That percentage goes up. So if you're in a 22% tax bracket and you take money out of your 401k or your IRA, Uncle Sam's going to get at least 22% of it, maybe more, because it may push you into a higher tax bracket, or it may make your Social Security taxable. So it could be a higher number than that. People forget about taxes, and it's one of the areas that folks really need to realize that it plays a big role. And, not like inflation. Inflation we call the silent killer, but taxes are forgotten and until it's too late a lot of times.
Mm-hmm. And just something that we want to be mindful of, what the impact is there. The last one on my list today is longevity. And here's what I mean. The good news is we're living longer in retirement. The bad news is we're living longer in retirement. Talk about how that is both. It's good and bad.
It is good news, right? It's good news. Well, I say that. It's good news as long as you're in good health, right?
Yeah, but living a long, healthy life is a good thing, for sure.
That's right. And when I sit down with folks, that's always the point of that conversation is, if I'm healthy, I don't mind living a long time. If I'm not healthy, I don't want to live that long. But in either case, if your longevity is there, then it means we need to have more money to get us through to the end of our life. It means that we need to make better choices about our health so that we are healthy, right? Is it because healthcare could cost you an enormous amount of money over that time period? And so, we want to make sure that we're as fit and healthy as possible. And we need a plan for longer lifespans, because who knows how long we're going to be here. You could have more healthcare costs the longer you live. You could have more years of paying for your basic living expenses. You'll have more years of paying taxes. And guess what? Taxes don't quit just because you reach 80 or 90 or 100. We still have to pay Uncle Sam. All these things come into the risk of living too long. That we call the longevity risk. And so we want to make sure that we're mindful of that when we plan for our retirement income.
Philip, how do you help somebody create a plan where they don't outlive their money if they do end up living a long time?
It starts with finding out what they need in terms of monthly income. And we build that by taking what their budget is today. We apply some inflationary numbers. We don't know what inflation is going to be, but we have to plan for something. And we put inflation numbers in there. It says, hey, look, we're having inflation. We need to build this out so that you get periodic raises in your income from now to age 100. And so we look at putting together those buckets and making sure that we are going to put together a plan that is conservative enough to get you through retirement the rest of your life, but objective enough to give you enough income to live off of. So folks, listen, when you look at your retirement, a written retirement income plan is key part of that planning process. If you don't have a written retirement income plan, and 90 to 95% of the folks out there don't, give us a call and let us help walk you through that process to determine what your retirement could look like given your account balances right now. Give us a call at 863-285-3815. Again, that number is 863-285-3815.
You've been listening to the Statler Financial Radio Show. Be sure to tune in again next week for more insights from Philip. I'm Jen Rezac. Glad you spent some time with us here today. We hope you have a great week.
Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Information provided during the Statler Financial Radio Show is for illustrative purposes only and does not constitute investment, tax, or legal advice. Information has been obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified investment, legal, or tax professional before taking any action. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Individuals should thoroughly review the contract for specific details of the product features and costs. Income payments and withdrawals from deferred annuities are generally taxable as ordinary income in the year they are taken. All investing involves risk, including the potential loss of principal. No strategy is guaranteed to be successful.
This radio show is a paid placement.